Hey everybody, this is Eric Gross with Keller Williams Pinnacle Group. My wife and I are both licensed realtors in the Cincinnati area, and we work with both investors and retail clients. And the last 3 or 4 months in 2022, we've been doing market updates, whether it's through email, video, just for our clients so they know what's going on and for everybody else. So beginning of 2022, what we saw was the same thing we had seen in 2020 and 2021. Interest rates were at an all-time low. There was low inventory, really high demand. Prices were continuing to appreciate. Sellers weren't giving up any concessions. Buyers were going way over the asking price. Starting in March, the Fed actually started raising the interest rate, and with that, we've seen demand start to cool. We explained that in our last video. Well, today's actually November 2nd. Powell just got done speaking. It seems like they're going to remain hawkish. They're really committed to reducing this inflation. They just did a 75 basis points, which is what we expected. It's going to be baked into the mortgage rates. We don't expect them to increase by any means right now, maybe a little bit. The big concern is his comments, that the comments that he makes can actually affect the way we go with rates. So those comments being a little bit more hawkish than people were expecting, might see those rates go up a little bit more. In October, we saw interest rates get near or at 7%, and for some subprime buyers, meaning maybe not the best borrowers, middle 7%. And that's having a huge impact on our inventory. That's having a huge impact on sales. So what we've noticed, there's less houses hitting the market, which in Cincinnati is very common. We're a seasonal time. This is a very slow time period for us. Our busiest time period is in the spring and summer. We really see fall and winter, it starts to slow down. So we've seen less houses hitting the market, but we've seen more houses sitting on the market. That means there's more inventory overall, just in general. We've seen our month supply go up a little bit compared to last November. Our days on market are up to 5 days compared to last year. I think we were at 2 days at this time period. And we've seen price reductions skyrocket. And we've also seen the number of homes on the market, like active homes, also increase. So when there's less homes hitting the market, but that active number is still increasing, that means there's less people going under contract. And when there's less number of homes being sold in a month, that means what we're seeing is it kind of makes sense. There's less people going under contract. There's less people actually continuing with that sale. So our recommendation, if you're a retail buyer, now could be a great time to start to look. We've actually had a couple buyers. We had a house that was listed at $220 that we got for a buyer. We lowballed, we got it for $165, and that one will be for an investor. And then we just had another home that was listed at $300. It was on for 4 days. We offered $279.9 with $5,000 in closing. They actually accepted that offer. 4 days on market and essentially a $25,000 off. So for a retail buyer, it can be a great time to look. For an investor, the best thing you can do is be as conservative as possible. When you're running your comps right now, you're wanting to run them realistically no more than 3 to 6 months out. So no more than 180 days. And that's like the max. If you have to go back a year, you need to take off 5 to 10% of the value to make up for the fact that interest rates have gone up so much, possibly even more depending on the area. Something else we're seeing in the Cincinnati and surrounding areas, the A areas, the really good areas are still staying strong. They still have a lot of demand. The low B, C, and possibly even D areas, those are the ones that are really suffering. Those are the ones where the inventory is increasing, prices are coming down. So that's something else. You're gonna wanna buy in an area that's gonna maintain that demand, and you don't wanna go in an area where you're thinking, hey, either cash flow or on a flip, these numbers are really meaty, but on the resale, it's gonna be tougher. So that's our market update. I hope this made sense. If you have any more questions, you can reach out to us. My phone number is 513-907-4271. My email is Eric, E-R-I-C, Gross, G-R-O-S-S, Group, G-R-O-U-P, @gmail.com. Hope everybody has a great week. We're here to answer any questions, and have a good one.